Welcome to the May 28th, 2021 video version of the Wagner Daily. My name is Rick Petticelli. As usual, once a week, this video replaces the written commentary portion of our report. Hopefully it serves as a nice change of pace, as well as offers some insight as to how we set up our charts, what time frames and indicators we use. On the left-hand side here, we have a daily chart with the 10 and 20 EMAs, 50, 200 SMA, an RS line. That's not to be confused with an RSI indicator. This RS line compares the strength of the whatever ticker I have here versus the S&P 500. Then we have volume with the moving average. On the right hand side we have a weekly chart with the 10, 20, 30, and 40 week MAs. The 20 is an EMA, the rest are SMAs. I also have a 200 week MA that I'll use. It's down here. And I like to use that when I'm looking at stocks that are coming off of a multi-year downtrend line break, as they often find resistance at the first touch of the 200 week MA. As usual, we're going to run through a few broad market indices, then we'll take a look at model positions in the model portfolio, and finally we'll take a look at what's out there in terms of actionable buy setups. First up is the Nasdaq Composite, which is now in a buy signal for us after reclaiming the 50-day and 20-day EMA this week. The 10 and 20-day moving average have turned up. It's a positive sign. So what we're looking for in the Nasdaq in the short term is just to hold above the 13,600 level, which is a big area of support. And on the weekly chart, we see the Nasdaq is now 3 months into a base. And the first pullback was about 12% off the highs. The second, 8%. So overall, the price action is tightening up, which is a positive sign. Onto the S&P 500, which has been above the 50 MA and did reclaim the 20-day EMA this week and is also now above the 10-day EMA. So the 10 and 20 have turned up. The biggest issue with the S&P is 2 weeks ago, there was a hanging man, a bearish candle on the weekly chart here. And it did have a lower close the following week, but as you can see, price action found support just above 4,000, which is positive. Though it may take the S&P a few weeks to work off that wide-ranged hanging man candle before it could head much higher. But we have noticed since the S&P 500 put in this hanging man candle that money has rotated into growth, moved away a bit from the cyclicals that were leading. Next up is IWP, which is the mid-cap growth ETF and has a ton of stocks that we like to trade, which is why we follow. It also reclaimed the 50 and the 20-day EMA this week and last week, and the EMA has turned up, which is a positive sign here. So good to see that growth is coming back. Onto open positions in the model portfolio. We have Roblox, which we bought above 78, up about 20%. UPST triggered on Thursday, followed through on on a pickup in volume, so pretty nice action. This was a pullback entry, stopping just shy of the 10-day EMA. PATH triggered over Wednesday's inside day, but failed to follow through and pulled back here, took out the inside day low. We plan to stop out if there's further weakness, as it does report earnings on 6/8. APP, another inside day that we tried to take advantage of with an entry over the high of that day, and it failed to follow through, but doesn't report earnings until 8/11, so we have a bit of time. We'd like to see if the price action can remain above the 10-day EMA. And a final position also triggered on Thursday. We purchased SC after it reversed off support of the 10-day EMA and rallied back through the prior day's high. So that was a bullish reversal, and it followed through in the final hour of trading to the upside. Had nice volume, well above average, and closed above the swing high. So you can see the pattern here. We look for momentum to carry the price action up to this downtrend line somewhere around the 275 area. So those are current open positions in terms of what's out there. We're waiting for support on a touch of the 10-day EMA. AMAT, sort of the same
Waiting
story.
for
For a pullback to the 10 EMA there too as well. Snap is interesting in that it's broken its downtrend line. Is still about 5% away from the 10-day EMA. CRWD, CrowdStrike, reclaimed the 50-day EMA like the Nasdaq and pushed higher, now into resistance of the prior high. But so far, although there was a bit of a rejection of the prior high on 526, the price action recovered nicely on Thursday. So overall looking pretty strong here. Maybe just needs a few days sideways here. And if it does and tightens up, could be in play for us. Though do want to point out that earnings are 6/3, which is next week, next Wednesday. Path, we mentioned we're long due to the breakout from an IPO base and then that inside day. Unfortunately sold off. If it does take out this 82 level here, then we look for a pullback into this 10-day EMA and for price action to reverse off that level. The only concern there is that earnings are on 6/8. So if any entry triggers off the 10 EMA, would have to reverse pretty quick in order to give any type of profit buffer to hold through the report. LSPD is interesting. Has rallied up to resistance around 74. If it can bust through this area, then possibly could be to new highs in short order. QFIN is also interesting. There's a bit of an undercut here of the prior lows and then a strong reversal. Reclaim the 50 on a pickup in volume here and cleared resistance at 28. And now it's just chopping around in a tight range, and note the big volume today in reaction to earnings. So it could certainly take off. And the last chart of the night is HAWY. We want to point out the false breakouts here and show you the different reaction to a false breakouts and what to look for. You'll note here on 517, there was a false breakout that closed near the lows of the session. The following day was an immediate break of the prior day's low, and which was followed by further weakness and until it found support at the 10-day EMA. Now note the next false breakout and poor close on 525. However, the price action did not take out that day's low the following day. It held, as did the next day. And so when trading, if you ever find yourself in a position where you have a breakout that failed and it closed right near the open, whether or not you want to cut partial size, that's fine. But cutting the full position, you might want to wait until the next day to see how it trades. And whether or not it's going to do something like it did on 518, head lower, or possibly hold that day's low the next day and push higher. Now there could be a dip a little bit on the open the following day. You just have to watch the first 15 minutes of trading and see what happens. But generally speaking, the failed reversal day low holds. It could attempt to re-break out again. And that's what could happen here in HAYW. All right, so just a quick recap. The market timing model is back on a buy signal. We like what's going on in IWP, the mid-cap growth index. We like what's going on in the Nasdaq. Growth stocks reclaim the 50 EMA and are pushing higher. Some are breaking out like Roblox, very big breakout, ton of volume there. So some positive signs. And again, we are heading into summer, so typically not the best time for the market. But the Nasdaq is now above a rising 10 and 20-day EMA, so let's just see what happens. As always, thanks for joining me. Have a great weekend. We'll see you next week.